Good morning, traders. It is Wednesday, August the 7th. We got some more pretty big price action going on today. Not so much with equities. They are continuing to bounce higher this morning, but in the precious metals sector, we'll cover that in just a second. Let's start off with the SP 500. Now, more or less, if we take a look at the two charts, we've got our trend analysis chart on the left-hand side, which green bars mean we are in an uptrend. Lime green areas mean we are in a oversold kind of momentum dip. Orange bars mean we get into a trend reversal, we sell short, and now the bars are turning red, meaning we are in a downtrend, and bounces can technically get sold into once we do get an overbought signal. Now there is a gap on the chart here from the previous session. We talked about this yesterday. There's this big gap window that could fill. So we got to watch for price to potentially bounce higher. And today, if we actually look on the daily chart here on the right, you can see the 24-hour chart. It's moving higher. We're trading up by about well, actually it's pulled back a little bit, but we were up about 1/3% a few minutes ago. So the market's trying to move higher here, and this chart here is only regular trading hours on the left, so it's only 9:30 to 4. That's when the majority of volume is traded. That's what I base my key analysis for trend analysis on. Now, if we take a look at the price, you can see the cycle pointing to the upside. The cycles don't mean price is going to move to that level. It just means when the cycle bias when it's trending up, we need to expect prices to move higher or sideways. Technically, we're in a downtrend, so a lot of these moves here will be muted, meaning even though the cycle is moving up, we might only see the market kind of trade sideways and stall out. And really, the key is when there's a downward bias in the cycle and we're in a downtrend, that's when we see price move very quickly to the downside with the cycle. So this counter trend cycle to the upside should be muted. Now, if we take a look over here on the daily chart, we are right here in the market. We were talking about this yesterday morning with this washout low, very similar to this type of low or this type of low. All the signatures are here. That is an extreme pivot low in the market. We had all of our short-term momentum cycles bottoming out as well. We talked about it at the close here. The previous session looked like there was some more downside, which there was, about 1.5% drop in overnight trading, and then the market ripped higher in overnight and pre-market the following session and opened higher. And the big question is this current price action where we are now, is that going to be something like this, or is it something, the start of a big V-shaped recovery to the upside? Of course, we don't know for sure. Right now, the trend is down. We have to give the market another day or two to kind of work itself out and see if this shorter term cycle is the start of is just a dead cat bounce, and more or less we're going to continue to go down, test these lows that we saw in overnight trading, which is this low way over here. We could see the market pull back down, test the 200-day, this previous low, and potentially chop around and put in a bigger pattern. And if we go back in time, you can see, let's just go back to this pattern. And if you take a look, we could very easily see something like this. We could be somewhere just like this or something like this. This would be equivalent to here, and we might see the market bounce up, come back down, test those lows, chop around, build a big range here, a potential breakdown zone, very similar to what happened over here. We had the move down, came back up, and then chopped around, built a range, and then had a much bigger collapse back in 2018. So that's what we're looking for. We are into this kind of potential topping phase. You could argue there could be a shoulder ahead. We may get some type of shoulder formation and a neckline here that when it breaks, we could see a very significant drop back down. So there's a lot of different things that could happen. The key is just following the trend close enough that we can profit from these drops. And if the trend starts to turn up, we get long again and potentially re-enter a short. If the market continues to stay underperforms and stays in a downtrend, we get short, looking for that big breakout and massive sell-off that happened back in December to happen again. Now, if we take a look let's take a look at the chart of bonds. Bonds are up this morning. You can see bonds really popping, extending back up. They've really come to life. We are getting to, just visually, when you look at the bond chart, if we look at the bond, you can see we've had a really strong run. We had a really strong run over here, another really strong run over here. We had, kind of a double strong run over here. This was a really significant low in the market. We had a big move there, but if you look at just these average moves in the market where we get these kind of really strong panic selling in the stock market where money piles into bonds, we've had about the same distance move each time. So I wouldn't be surprised if the stock market does start to find a bottom here and this starts to flag out and hold its ground, just like we've seen here. It rallies, flags out, rallies, flags out, rallies, flags out, rallies. And if the stock market bounces, money's going to flow out of bonds, but it'll still be scared and probably hold price up until the next downdraft in stocks, and then bonds could take off again. Now, if we take a look over at, let's take a look at gold. Gold really popping today, up 1 and almost 1.5% this morning. Our UGLD, our triple leverage gold fund, will be up about 13, 14, or 15% this morning. It's actually trading in pre-market above our first target, which we're going to sell a portion of our position at the open, or you can do so now if you can trade pre-market. Lock in some gains, and we'll be moving our stop to our entry price to protect the rest. But we're up about, I think it's about 14 or 15% with our first target here. And gold's getting a little extended. I think if the equities market put in a very strong bounce, this big pop in gold could fizzle right back down again, much like we saw over here with this type of pop that we saw here. We saw everybody kind of pile into gold and then it fizzled right back out. This could be very similar where we start to see it fizzle back out and come back down. So either way, long-term investing portfolio, you should be long metals, miners, but as more of a short-term trader, we need to be aware that this could still reverse in a very significant way going forward, and we got to be sure we lock in some gains. And we do have a lot of position. We've got about 3/4 of our portfolio is in precious metals, either in the triple leverage gold or the silver miners, which is more than enough to grow an account in a big way. So we don't want to put all our eggs in one basket, and trimming some off here definitely give us some breathing space, because if they did all tank, our account would take a pretty good beating. So we got to make sure we manage our risk. Looking at silver. Silver finally doing some catch up. We talked about this. That's why we got in down over here where the market sold off after the Fed. We got into silver miners, which is a little more leverage play to the upside. Looking for silver to pop and outperform. Silver today up over 3%, so really strong pop. Our silver miners, the CTF doesn't really trade in pre-market. It is showing it's at 29.38. So it's up here testing these recent highs in the market, and that's just where the last tick is. Who knows where it really is in pre-market, but overall we should see it continue to pop and run higher and continue to get those targets. Now if we take a look at the short-term analysis of silver miners, this is the SIL, you can see we've had our cycles, prices move very well with the cycles, and we are in an uptrend. And I just talked about this cycle skew on the other chart. Let me just, so you can see a visual here. So we have got green bars, which means we are in an uptrend, which means the market will rally, silver will rally with the up cycle, when the cycle is in favor. And when the cycle is pulling down, it'll be skewed, it'll be muted, meaning instead of silver selling all the way back down again, it just flags out and holds its ground even though the cycle is moving down until the next cycle bottoms and turns up, and then you see silver pop again. And then as the cycle moves down against the uptrend, it just flags and holds its ground until it bottoms. And then we see this upward cycle again, and today we're going to see silver miners take off. So that's how cycles work. That's why you don't want to try shorting on a cycle top in an uptrend, because it doesn't really pull back. It just holds its ground until there's a cycle, and then it takes off to the upside. You want to buy these dips. You want to buy in these areas at cycle lows, and then when the upward cycle kicks in, you get that big explosive pop. We've had these really nice moves in silver miners, and today should be another nice one, showing we're trading somewhere right up here right now. So we've already had we're going to have a huge gap up in silver miners. Taking a look over at energies real quick. I think there's some interesting cycle analysis actually on crude. So here's crude. We talked about crude yesterday in the video, how it had this big move down, forming this little bear flag, these inside bars, how it looked like this move here could very easily start and carry us down the same distance to the downside. Just visually, it's also a Fibonacci target. It's also the recent low that we saw back over here in June. And if we look at the cycle analysis, you can get a feel for the cycle skew here. Let's just move this over a bit. If we look at the cycles, you can see that bars are red, which means the trend is down. And so you'd be looking to short cycle tops in the market. So when the cycle is moving down, you can see how quick price moved with the cycle. And as this cycle is moving up, it's had a very muted move. And in fact, if there's so much selling pressure in crude, it's actually bucking the cycle, bucking the trend and testing these lows on the verge of breaking down. And we haven't even got to the downward cycle yet in the market that would follow suit here. So potentially this drop just starting could be a very significant drop. If the upward cycle is still, the price is still falling, then when things really give way, it's going to break and flush to the downside. It's how you get these type of days. You get similar type of massive waterfall sell-offs where things just completely crumble. There's so much selling pressure, the cycle isn't even in favor anymore. It's just constantly going down, down, down. So that's kind of a quick run through of kind of how we kind of perceive the cycles and how the market moves. When it's in a downtrend, you're not looking to buy oversold, you're looking to sell cycle tops in the market because that's when you get these big drops and things. So let's take a look over at natural gas. Here is the natural gas chart. It got all the way down very close to our $2 level. It's having a technical bounce, which is good. We'll see if it continues to move down. Ideally, I'd like to see it come down, take that two level. Short-term basis, it was very oversold and it hit a long-term support area. We're getting that bounce. But the question is, how big is this pattern going to play out, and how is it going to shake out over the next little while? We could easily see this continue to kind of be out of favor and come back down and test these lows for a while. This is a strong downtrend. Usually it's not going to just reverse on its first bounce. It could very easily chop around for a while and build a much larger basing formation. If you look at this recent volatility, here's this big volatility. We had a strong pop all the way up here, and then it sold all the way back down. It's now created this range that is going to be fairly significant. There was big selling in here, some big buying, and some more huge selling to new lows. So this is the range where something is probably going to build. Maybe it goes down and makes a nominal new low each time, which is what I like to see, these nominal new lows, especially if you get 3 of them back to back with a knee-jerk reaction back up each time. It is a very good indicator that we're getting a bottom is getting put in, and we'll eventually see a very strong rally and breakout and a significant run. And we do have a $3 upside target for natural gas, but we need to see a bottom form first. Last but not least, let's just actually let's cover a couple more precious metals real quick. Take a look over at so silver and gold rocketing higher. Platinum and palladium, not so much the safe haven plays. They're not really, I don't see them so much as a safe haven, but look at platinum. It's got a bearish formation. It's popped today. It's at the upper range, but overall still kind of a bearish formation. I'm not a fan of this. This is a bear flag. It actually is pointing to a continuation move to the downside. If it did get down here, it'd be very nice buy. It's a 50-day moving average, 200-day moving average. It would be more or less a measured Fibonacci move. So down here would be a great buy. At this point, though, I'm not a fan of the bearish formation in platinum. If we take a look at palladium, we talked about a double top right over here. Since then, it's been moving down, and it has fallen down to support. But in the grand scheme of things, it's fallen down. It's got what looks and feels like a bearish formation, and it could flush down, maybe test the 200-day. 200-day is also right through the heart of all this support zone through here. So there'll be a lot of support for if it comes down, tests these levels again, and chops around potentially to this 1360 area. But overall, the safe havens, gold and silver, are the kind of the real currency of type safe havens. They're moving higher. Well, palladium is more industrial metal. Platinum is just not on everyone's radar looking to buy. So it's usually out of favor and follows suit months and months after gold and silver do, as investors look for the next valuable precious metal when gold and silver seem to be overbought, overpriced. Look, US dollar index. US dollar is actually moving up a little bit today. This doesn't show today's, this is the UUP ETF that mimics it. If we take a look over at the US dollar, you can see here's our 30-minute chart, and more or less it got oversold the last two sessions, and it's starting to bounce a bit. We're on this green line here, which is also the pink line over here. It's the 20-day moving average, and we're getting a technical bounce. We're at the top of a gap window. We are at the last time there was 3 bars here that traded. It's the 20-day moving average. I think it's actually a significant pivot high right over here as well. So we're getting a bounce. Dollar's moving up a little bit, relatively flat, but we're seeing metals really take off, and it's going to be interesting to see where metals end up and where the dollar ends up. We got this bounce. It might move up a little bit. If we do get a measured move to the downside with the dollar, which would bring us right through the heart of this consolidation, this drop in the dollar over the next week or so could send precious metals rocketing higher. All right, well, I think that's about it for today. Video's a little longer, but I wanted to show you a little bit of how cycles work and how you want to buy the dips in an uptrend and you want to sell cycle tops in a downtrend, and kind of where we are in the grand scheme of things of the markets. Anyways, that's it for now. Talk to you in a bit. Bye-bye.